Some reaction to it from Fox News contributor Scott Martin, Moody's managing director John Lonski. John, to you first. Looks to me like the president's hard line on trade at this moment today is working. He's got a deal with ZTE. They pay us $1 billion and they're going to get in line with the sanctions policy. Looks to me like the hard line wins. What do you say?
Well, so far, so good. According to financial market performance, the equity market is higher June to date. They don't seem to be especially worried about the possibility of a damaging trade war. Let's see how it proceeds.
OK, to you, Scott Martin, same question. Why? Look, this is a hard line on trade. It's ongoing. But the market doesn't seem to care. What say you?
I think the market has confidence that things are going to work out, to your point. Gosh, man, I loved what you said there. You know, the world's not used to an America First president. I mean, that's so true. It's like, yes, I get it. The delivery at times has been questionable, maybe like that of a playground bully to some degree. But my goodness, isn't it working, guys? And I'll tell you the other interesting thing. Don't forget, America's, yes, the biggest economy in the world, but also the world's largest shopper. So if you're like Walmart, Amazon, Kohl's, whoever else is out there that you think about your biggest shopper, your biggest demographic, you want to cater to them. So that's really what I think the president has behind him, is the fact that America buys stuff from everywhere. We have great economic growth. We have great tax policy now, and people want to work with us and not shun us.
The mainstream media refuses to give President Trump almost any credit for the strong economy. I just want you both to listen to this exchange between Larry Kudlow and a reporter during a press briefing yesterday. Roll tape.
He tweeted this week, best economy and jobs ever, but unemployment, as you know, though there's a good story to tell, unemployment is not at an all-time low. GDP growth is not at an all-time high. So while the economy is doing well, how should we read the president's words? Is it hyperbole? Should we not take him literally?
It's factual.
But in fact,
the 3.8% unemployment rate is among the lowest on record.
Correct.
That's
2.5% in 1953. So it's not the best ever. So it is hyperbole.
Well,
do you agree?
He's stating facts. The facts stand on their own. I'm not going to quibble with you about such things.
During that soundbite there, John Lonski was laughing. Explain your laughter, John Lonski.
Well, my laughter is, why go all the way back to 1953 and choose that 2.5% unemployment rate? My goodness, yeah, the Korean War was going on or something. You were close to full employment. That's an entirely different world. The reality is that a lot of us economists have had our long-term forecast ruined by the election of Donald Trump. I mean, the idea was that growth would be stuck at 2% indefinitely. Secular stagnation had set in for the long run. And now we're not so sure that that's necessarily going to be the case.
Yeah, I just look. It was so petty, Scott. Just so petty. They were technical in their criticisms of the President Trump and distracting from the message, which is the economy is really, really doing very well. And that's maybe why we've got a rip-roaring rally going on. I think, honestly, that the message about the quality and strength of the economy is penetrating through that screen. I think that's what's going on. What say you?
Definitely is. I mean, the market is the ultimate judge. I agree it's petty. I mean, if that's the biggest problem we have here, guys, on the economic data front, is whether it's 3.8% or 2.5 or 2.7, I mean, big freaking deal, you know. And I'll tell you what else is interesting. I mean, we could see the same thing happen with GDP. The Atlanta Fed now, Stuart, is saying Q2 GDP is probably going to be 4.5%, maybe even more, as that's been going up over the last few weeks. I mean, what's that going to be an argument about? Oh, well, he said it was going to be 5. I mean, we've got all these great data points out there that the left and some of the haters, as the kids like to say, want to poo-poo these numbers. The fact is they're on the rise and things are developing the way that he always said they would.
I want a quick comment from John and maybe you, Scott, about what Warren Buffett and Jamie Dimon are saying in an editorial today. They want an end to short-termism. They want an end to these every 3 months a CEO's got to get up there and tell them what's going on with the company and report their earnings. An end to the quarterly reports.
Easier said than done. Companies still have to make quarterly reports. What they said in this article was that they don't want companies to give earnings guidance, earnings forecasts, out of the belief that doing so forces executives to devote too much energy into meeting those forecasts as opposed to worrying about the long term.
So is it going to happen? No.
If it does, well, it doesn't really make that much of a difference. It would be nice if it happens. Maybe just analysts should be the ones doing earnings forecasts and not corporate executives.
What do you say, Scott?
Analysts are terrible, though, John. I mean, if you look at some of these analyst reports, my gosh, man, I don't know who put these together. It looks like their kids wrote them. The long term's definitely dead, Stuart. I agree with that, but that helps money managers and investment advisors like me because we do the hard work to figure out what's going to happen in your portfolio in the next 3 to 6 months, not the next 3 to 5 years.
Okay.
And may I add that nobody can accurately predict long-term economic performance or financial performance. That's an impossibility. So in that case, you're perhaps asking too much of corporate executives.
All right, we'll wrap it up right there. John, Scott, both of you, thanks for joining us. Always appreciate it. Okay.